Today we're going to be covering MGM Resorts International. MGM Resorts International is an American-based company that conducts its business within both the hotel and adult gaming industries. While lodging and gaming are responsible for a majority of MGM International's businesses, they also host events such as fights, concerts, and much more on their properties. The company is most famous for their multitude of properties in the Las Vegas area, including the MGM Grand, the Bellagio, and Aria. They also have international resorts in China.
So first, when looking at the annual report, we checked out the business section, and here they talk about some of their future business developments, like wanting to get into the U.S. online sports betting and other e-gambling services, as well as expanding and diversifying some of their overseas operations. Next, we looked at the management discussion and analysis of their financial conditions and results of operations. And here they pretty much just summarized why their numbers didn't look as hot as they wanted them to following the COVID-19 pandemic. Next slide. Finally, we looked at the quantitative and qualitative disclosures about market risk, where they describe some of the risks they're taking on and how they want to manage them. They point out that a lot of their market risk is from variable rates on long-term debts, and that they're attempting to limit their exposure to those. But because they're long-term debts, they're still needing to pay some of those off. Next slide.
Okay, so in the past, MGM Resorts has been strong financial performance driven by its operations in popular tourist destinations and its focus on providing a high level of guest service. The company's net income in 2019 was roughly about 2.2 billion. In 2020, the net income was roughly 1.3 billion, and in 2021 it was roughly around 1.2 billion. Their reputation is a dominant force in the travel and hospitality sector. The business has earned a reputation for producing top-notch resorts and visitor experiences. They have proven a track record of stability with a history of steady growth and strong financial performance. The global pandemic has had a significant impact, like Nolan said, on the travel and hospitality industries. The company was forced to temporarily close many of its resorts, which has led to a decline in some revenue. The global COVID-19 pandemic has continued to materially impact the business, financial results, and liquidity, and such impact could worsen and last for an unknown period of time. Current and future economic, capital, and credit market conditions could adversely affect the ability to service our substantial indebtedness and significant financial commitments or make planned expenditures.
So the industry research with regard to luxury hotels in the U.S., retail value sales rise by 24% in 2021 to 8.4 billion. Marriott International Incorporated is the leading player as of 2020 with a retail value share of 25%. Retail sales are expected to grow at a current value CAGR of 60%, 2021 constant value CAGR of 13% over the forecast period, and sales performance is expected to steadily drop after post-lockdown resurgence, as seen on the graph below.
Moving on to the competitors of MGM Resorts International, we looked at other Las Vegas Strip titans. These are all multi-billion-dollar corporations who specialize in hotel and adult gaming. We looked at Caesars Entertainment, Las Vegas Sands Corp, and Wynn Resorts, and you can see their market caps, revenue, and net income on the slide.
So next, we wanted to look at the financial ratio analysis for MGM. You can see over the 5 years, their gross profit margin was pretty steady from 2017 to 2019, but went down in 2020 during the pandemic. And that's also seen with their net profit and operating margins. And then if you look at just from the current year to prior year, all of those margins have improved. Next slide. And then in looking at the competitors, you can see that they also had a similar trend, improving from 2020 to 21, and we're also kind of lumped in a similar area. Next slide. You can see that with Caesars Entertainment Incorporated as well. All of those margins improved from their prior year to their current year, but we were only able to get data from 2003 and 2004 for that competitor. Next slide. The other point we wanted to look at was the risk factors for MGM resorts. And you can see that 2017, 2018, 2019 was all very steady for their current ratio in a healthy area, but then 2020 went up to 3.21. And then in 2021 went back down to a more steady level. And for Caesars Entertainment, you can see that their info from 2003 to 2004 is dated, but they dropped to a more unhealthy current ratio. And then Wind Resorts stayed in a steady spot, as well as Las Vegas Sands. Next slide.
Yeah, continuing looking at risk, we've next looked at the debt equity ratios for both the current year and prior year. And for all of these corporations, the ratio increased. Next slide. We next looked at the debt ratio. Then again, current year and prior year. After 2020, ratios began to increase as a result of the pandemic coming to an end. Next slide.
So the cash flow statement analysis for operating activities, operating costs increased from around negative 1.5 billion in 2020 to 1.3 billion in 2021. We believe this could be explained by the effects of COVID-19 on the hotel and resort industry. With regard to investing activities decreased from amount of 2 billion in 2020 to 1.5 billion in 2021. This could be explained by operations resuming following COVID-19. And the financial activities, net cash flow from financing activities have decreased from 2 billion in 2020 to negative 2.8 billion in 2021, a decrease of around 4.5 billion. And working capital in 2021 was around 2.9 billion, and working capital in 2020 around 4 billion.
So this here are the results from what we have discussed here, and in terms of whether MGM Resorts is better or worse compared to previous 4 years, we can see that there's no clear trend in the data over the past 4 years. MGM Resorts have fluctuated a lot. There's also been a big drop off in 2020 due to the COVID pandemic, but not before. Operating margin and net profit margin were the highest in 2017 and 2019. After this drop off in the COVID pandemic, the margins have since recovered to pre-pandemic levels. We also compared MGM Resorts to the prior year. So in terms of the data from 2021, we compared it to 2020. We see that gross profit increased from 33% to 48%, which is an increase of 15%. Gross profit also increased in the operating margin of a massive 46%, improving from minus 40% in the prior year to 6% in 2021. And the net profit margin also highlighted this improved performance as it went from minus 20% in 2020 to 13% in 2021, an increase of 33%. Next slide. So we also compared MGM Resorts to 3 competitors based on their respective margins. These competitors are Caesars Entertainment, Wynn Resorts, and Las Vegas Sands. If we take the data from 2021, MGM Resorts outperforms all competitors who provide data on their margin for that particular year. In terms of gross profit margin, net profit margin, operating margin, MGM Resorts has the highest margins of 40%, 13%, and 6% respectively. This is in comparison to Wynn Resorts that has 32%, minus 11%, and minus 20%, as well as Las Vegas Sands margins of 30%, negative 16%, and negative 23%. So we can see that the MGM Resorts significantly outperforms both competitors across all margins, especially in terms of these operating margins and net profits, with neither competitors coming close to turning over positive values. The data we collected from Caesars Entertainment does prove tricky to compare to the margins from MGM Resorts due to the difference in the year that the data has been collected from. However, despite the data being collected in 2004, Caesars Entertainment has better margins across all data points compared to MGM Resorts margins of 2021, which is a whole 17 years later. Although they are better, they are extremely similar, with the MGM Resorts not reaching Caesars Entertainment by 4% in terms of gross profit and 2% and 1% in terms of operating margins and net profit margins.
Okay, so in conclusion, MGM Resorts has a history of steady revenue and earnings growth, which demonstrates its ability to generate consistent and sustainable profits. Another strength MGM Resorts has is a strong track record of generating consistent cash flow, which provides the company with the financial flexibility to invest in new projects, pay dividends, and repay debt. They also make significant investments in the resorts through newly remodeled hotel rooms, restaurants, entertainment, and nightlife offerings. Some weaknesses MGM Resorts have, they operate primarily in the hospitality and tourism industry, which can make the company vulnerable to changes in consumer behavior or economic conditions in this sector. They also operate in a highly competitive industry with many other well-established companies compete for market share. This competition can put pressure on the company's margins and make it more difficult to grow. Some opportunities MGM Resorts have is a strong financial position and the resources to pursue strategic partnerships. On August 4th in 2021, they entered into an agreement with VICI Properties and MGP whereby VICI will acquire MGP in a stock-for-stock transaction, and that can grow the company itself. Lastly, there's a growing trend toward the use of technology in the hospitality industry, and MGM Resorts has the opportunity to continue invest in new technologies to enhance the guest experience. And our last slide is our citations for MGM and all of our competitors. Thank you.